Hello and welcome to KG on the Porch. I'm Kristin Graham, Senior Loan Officer and Team Lead of the Kristin Graham Mortgage Team. Today I'd like to discuss a term that we're going to start hearing, and it's the buy down. What is a buy down and how does this benefit you as the buyer? What does this mean? Buy down is a fee used to buy down the interest rate on your mortgage. This can be done in a couple of different ways. There is a permanent buy down and there is a temporary buy down. Permanent buy down simply means that you as the buyer are paying to lower your interest rate by paying a discount fee. And this means the rate can drop anywhere from 1/8 to 1/4 to 3/8 to 0.5%. And there is a fee that is going to be associated with each of those lowering loan interest rate amounts. So if you drop from a 6 to a 5.875 to a 5.5, there's going to be different costs associated with paying that interest rate down or buying that rate down. That's your permanent buy down. The temporary buy down is a product or a program that's been around for a while, but in our lowest, historically low interest rate environment, it was not something that we really needed. In our current rate environment, which is actually still really great interest rates, there's more of a payment shock that we're seeing at this time because rates have moved up significantly in the last 6 months. So a buyer that started their home buying process a couple of months ago may be faced with what we call payment shock. So the same house that they were looking at 2 months ago will now cost them, due to interest rate, potentially anywhere from $100 to maybe $200 or $300 more. It really would depend on that sales price. So a temporary buy down allows a buyer the opportunity to buy the interest rate by 2 points and 1 point. So this is called a 2-1 buy down. So let's just take round numbers right now, and let's just say that a 30-year fixed rate is at 6%. The 2-1 buy down, in the first year, the buyer will pay a payment with a 4% interest rate. And the second year, the buyer will make a payment at a 5% interest rate. Years 3 through 30 will be at the fixed rate of 6%. We as loan officers will ensure that you are qualified at the 6% interest rate, the monthly payment associated with that. But this allows you to ease into that payment and not have such a big payment shock. Now, we can't guarantee that there's an opportunity to refinance. However, if in that 24-month period where you are taking advantage of the lower monthly payment due to the 2-1 temporary buy down, if a refinance opportunity does occur, there's no penalty to refinancing. In fact, it would be encouraged to take advantage of that lower interest rate, just like you would if you locked in your rate today without the buy down and you locked your rate at the 6%. If rates drop to 4.5 in a year to 2 years from now, it's pretty much guaranteed that you as the buyer or homeowner at that time will be interested in looking at your options to refinance. So the 2-1 buy down is a really great effective tool for a buyer at this point. But what makes it even more beneficial to the buyer is if the seller will pay for the buy down cost. And this is going to be approximately 2.25% of the loan amount. So it's important to work with a loan officer and a realtor that understands what our current market is doing and what these opportunities, such as the permanent buy down or the temporary buy down, and how they are going to affect you and benefit you as the buyer. And no, it may sound a little bit like smoke and mirrors, like, oh, my interest rate's just going to magically be 2% less and then 1% less. It sounds a little bit like an adjustable rate mortgage. I can assure you the 2-1 buy down is not an ARM. It is a fixed interest rate that the seller has paid on your behalf, and those dollars are kept into an escrow account, and the difference in that interest rate is made up by the monies that are being held in that escrow account. And that gets a little more complicated, and it would be important to contact a loan officer like myself that can discuss with you the particulars of the 2-1 buy down and how this will benefit you at this current time in our market where we've seen the rapidly increasing rates take place. Again, rates are normalizing. I believe that our rates are actually in really good position. It's just that we've moved so quickly from the lower rates that we were accustomed to where we are today. So call me, let me discuss this 2-1 buy down, temporary buy down opportunity, or even the permanent buy down opportunity. Would love to share more information with you that would be more specific to your scenario. Happy to answer any questions. Again, this is Kristin Graham with the Kristin Graham Mortgage Team. Call me, text me. My information is going to be below. See you next time. Have a great day.